On Friday, the Reserve Bank repurchased $320 million worth of residential mortgage-backed securities from one or more of the local banks for a term of about 12 months. It was a big amount and suggests someone is having trouble funding their loan book. The money markets were alive with speculation on Friday about which bank is in trouble. For about 6 months, the Reserve has been quietly providing the banks with extra cash by repurchasing, or repoing, as it's called, a wider range of securities than usual, not just government bonds. The Federal Reserve Board in the US has been doing the same thing, but on a much larger and more urgent scale. It's needed because banks had loaded up their balance sheets with all sorts of rubbish, and then last year stopped lending to each other because they suspected that everyone else's rubbish was smellier than theirs, and they knew theirs was pretty smelly. No interbank lending means no liquidity, so central banks have had to step in and provide it by taking some of the rubbish off the bank's hands for cash. In Australia, the central bank's liquidity window has been slow to get busy, certainly slower than in the US, where banks and investment banks have lined up every day with wheelbarrows full of scraps of white paper to be turned into green ones with pictures of George Washington on them. But now a queue is forming in Martin Place, Sydney as well. This is at least partly caused by the fact that the Reserve Bank kept on raising interest rates as the Fed cut them, and the pips are now squeaking. So in amongst all the big ideas from this weekend's 2020 summit, there's an urgent one that RBA Governor Glenn Stevens might need from the economic stream being chaired by Wayne Swan and former Treasury and Westpac chap David Morgan. How do I get out of this mess?